Good day and welcome back to Anand Rathi Weekly Podcast Fundamental ka Vaar, Budhvaar. I am Narendra Solanki. So the big news this week is the latest India GDP data released. The GDP growth dropped to 4.4% year on year in 4Q22, down from 6.3% in third quarter 22. That was lower than both the Bloomberg economics forecast of 4.6% and the consensus estimate of 4.7%. The growth in gross value added, which strips out tax and subsidy transfer payments, came in at 4.6% year on year, which is in line with both the forecast and the consensus estimate. The second advanced estimate of GDP growth for the fiscal year 23 was retained at 7%, and GDP growth for the fiscal year 22 was revised higher to 9.1% from 8.7% earlier. The expectation of for fiscal 23 growth at 7.1%, but a lower 4Q22 growth now poses a slight downward risk to the forecast. The decline in the 4Q22 GDP reading reflects the impact of slowing global growth and rising domestic interest rate on services activity besides pandemic related distortions in year earlier quarters. The lower growth print for GDP relative to GVA also underlines the strain on government's net indirect tax collection on account of rising subsidies. Looking ahead, available data for the month of January has started to show further weakness in the growth momentum, a slump in imports, a drop in industrial growth, weaker PMI readings, and a construction slowdown, which all suggest that a global downturn and rising interest rates are starting to have more dampening impact on India's economy. A surprising jump in January's inflation reading, back above the RBI's target ceiling of 6%, suggests the hawkish central bank could deliver another rate hike per consensus. But with the recovery on shaky grounds, consensus is that the RBI may pause after lifting the repo rate by another 25 basis points in April from 6.5% and signal a pause in the hiking cycle. Now coming to the upcoming week events. Key economic events this week are: today China manufacturing PMI data is scheduled, Germany manufacturing PMI, Germany CPI, and US manufacturing PMI data is scheduled. On 2nd of March, Eurozone CPI data is scheduled. On 3rd of March, UK composite PMI, services PMI, and US non manufacturing PMI is scheduled. Now coming to the sector leadership on relative rotational basis for the week ahead, sectors leading are FMCG, IT, auto, and CPSC. Sectors showing improvements are pharma and consumer. Sectors weakening are metals, banks, financials, energy, and realty. So that's it from our side, and meet you same day next week. Happy investing. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.